Okay, good morning everybody. Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, September 1st. Start of a new month. Wasn't really a good month for August for the grains and the oilseeds. We had wheat prices down around 20 to 30 cents, corn market down around a nickel, beans down around 55 cents, meal down 12 bucks, soybean oil down 230 points. Everything except the soybean meal made new contract lows during the month of August, so not really starting off on a bright note here for the month of September. We do have wheat prices up around 2 cents, but corn's down around 3, beans down around 6, the meal market down a buck, and the soybean oil market down around 35 points. So we continue to stay mired in somewhat of a rut with grain and oilseed prices at this time. Maybe 4 topics for this morning here. We first had our crop progress and condition numbers come out after the close yesterday. We saw where the corn conditions went down 1% in the good excellent category, where the beans stayed unchanged. The trade was looking for down 1% in both of those. We are seeing harvest progress of corn and beans down in the Delta and the Southeast, so that's starting to work its way into the marketplace. We also continue to see where the Eastern Corn Belt needs another shot of rain in here to help finish off the crop, because the states that have the largest declines in the good or very poor category is Missouri, Illinois, Indiana, Ohio, and North Carolina. And we're moving along with our spring wheat harvest, around 88%. Next week we'll start seeing our winter wheat planting numbers, so that's all coming at us at this point in time. Secondly, we have FC Stone reportedly coming out this afternoon with their updated production numbers for corn and soybeans, and FOMA will be out later on this week. And this is all a precursor to the USDA coming up with their monthly supply and demand tables next Friday, September 11th. Thirdly, we had some news, economic macro. China came out with their PMI number. PMI number was the lowest in 3 years, continuing to show contraction of their economic activity. So it kind of sends a little bit of a negative ripple effect around the world. And we're also continuing to monitor their what they're going to do with their grain prices, particularly for corn. If they're going to lower that support price, if that's going to be the case, they may limit their imports, particularly from the U.S. for corn and DDGs. Time will tell on that. And then finally, the weather, we're still monitoring it. As I mentioned, still could use another finishing rain in the Eastern Corn Belt. But right now, it kind of looks warm and dry over the near term. Maybe we'll get a frontal passage coming in over the holiday weekend. But once again, it's not expected to lead to a lot of moisture for the Eastern Corn Belt. So once again, bad start or a negative start for the month of September after a negative August. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.